2, 1, and here we are, guys. Welcome to our Tom's Trading Essentials Part 3 live stream. Glad to have you here. Very exciting to be in here today. We are going to do a little bit of a review of what we've covered the last couple of weeks. Today, I want to get into spreads, and it makes sense because really, couldn't get into that AMC trade yesterday. Probably a good thing. Although, if you look at where it is, it's still higher than it was yesterday. But we're going to take a visit on that one and take a look at it as part of spreads. But hey, things have been turning up pretty good for us this week in the area of the case studies that I've been presenting to you. I'll share those with you all as well. So welcome, everybody. Glad to have you here. And, we've got all kinds of stuff going on here. And Steve, I've actually got charts that I just created on the results of the case studies we're looking at. So going to put those in there as well. So let's go ahead and get through the particulars here first as we move into Thursday, June 3rd, 2020. I've got some bad news for you, okay? Bad news is that I'm going to push Friday's live stream to Monday. All right. So I will not have a live stream on Friday. I promised you I was, but there is something that I cannot get out of tomorrow. And I tried, and it just is not going to happen. So we'll do cryptocurrency on Monday. All right. But got a lot of great stuff for you today. We're going to do a review of everything that we've covered so far, a quick review. And then I want to get into trading spreads and why I like trading spreads, and really why I like trading spreads in today's volatile stock market that we have going on. So let's go ahead and continue here real quick. Very quickly, disclaimer you see on the screen, you could pause this live stream or pause the video if you're watching the recording and read this in its entirety. I'm not going to read it to you, but I will mention two quick things. Number one, stock options and crypto trading has large potential rewards, but also large potential risk. I think a lot of folks that saw AMC yesterday with the large potential reward are looking at it again today with the large potential risk. And number two, I'm not a personal money manager. I don't give specified individual trading advice. All right. I'm here to show you how it is that I spot opportunities and create alternative risk trades other than simply buying and going long because I think something's going up. You'll never hear the word think come out of my mouth when it comes to an actual trade. All right. So those of you that are new, and we got some new folks in here that missed parts 1 and part 2, they are on our YouTube channel. All right. And all you got to do is just sometime after the live stream, if you want, go check out the YouTube channel and you'll see what it is that we do here. And what we do on our channel. We actually do a live stream once a week. We do videos once a week. We do podcasts once a week. But I've been putting together in a playlist all of our Trading Essentials live streams, and you can find them right there at tomsoptiontools.com. All right. Next thing that I want to mention is that, I've been around a little while. All right. I'm not a Gen Z. I'm not a Gen Y. I'm a Gen X. I'm a Gen Xer, and barely a Gen Xer. As I was born in the mid-'60s. So what have I been doing with my time? Well, actually, even out of high school, I got into the markets while I was working at a large home improvement center. And so I've been doing this now for 30 years and a 30-year veteran trading authority in stocks, options, commodities, and currencies. A lot of you know that I was the co-founder of Optionetics. And George Fontenills, who founded Optionetics, this week actually it's now been 9 years since he passed away. There's not a day that goes by I don't think about that guy because he was my mentor. He really got me into this business, and I am grateful for it. What do we do here on the YouTube channel? Well, all last year and all this year, what we've been doing with the monetization of this channel is we have been donating all of the profits to charity. And we donated thousands to charity last month. We're looking at some charities. We're looking at St. Jude this month among one of them. But chat with me live if you want to do a super chat donation. All of our super chat donations too go to charity. All right. And then finally, I want to mention that I don't do a lot of CNBC, Bloomberg, et cetera. But every once in a while, I do go on, typically around earnings season. But I am most notably the founder of Optionetics, co-founder of Optionetics, founder of TomGentile.com and Tom'sOptionTools.com, which we will be using today. If you want a 2-week free trial, you've never tried us before, check out the description below this live cast. All right, let's rock and roll here. So YouTube channel, thank you to all of you who are part of our YouTube channel. We cracked 20,000 at really around Memorial Day. We cracked the 20,000 mark, and we're super excited about that. We'll see where we go from here. Everything we do on our YouTube channel has to do with free education. Okay, and so if you're brand new to the trading community, or maybe you're tired of the high emotion, the supercharged stuff that you can get pretty much anywhere else, and you want to learn how to trade rules-based, then I believe you are in the right spot. All right. Today, we're going to talk about, we'll do a quick review. I want to review part 1, too. I want to talk about calls and puts. We're going to go through what happened to the Qs. I'm out of the Qs. I got out of the Qs this morning. I'm still long the BAC. Also, BIIB. I'll talk about that one. We'll talk about AMC. And my phone call I had, I promise you guys, when I got off this live stream, the next thing I was going to do was make a phone call to Charles Schwab, not Charles Schwab himself, the broker. And I want to let you know how that phone call went as well. So today, though, we'll be going into trading option spreads, and I've got some real-time case studies that I want to share with you as well. All right. What do we not do here? We don't think. We don't trade on fear. We don't trade on greed. We don't trade on hope. We don't trade on emotion. We are rules-based traders. That means we go back and we look at, in a lot of cases, years of data around patterns. And we find repeatable patterns, and we look to spot those repeatable patterns, create alternative risk trades on those. And a lot of those are options. We do some stuff in the cryptocurrency markets, and I'm going to be talking about that on Monday. But then it's also about planning, executing, and managing these trades. All right. Planning, executing, and managing had a lot to do with how I got out of QQQ this morning when it hit my profit target, and how I already have the BAC trade set up, and I just haven't seen that go through. It's profitable, but it hasn't hit my profit target yet. John Kine, thank you very much for that super chat donation. I appreciate that. Sounds like we're at a bar, huh? Anyway, guys. Very cool to have you guys in here today, and I got some trades for you too that we're going to be looking at as well. So going forward, let me back up a second here. So if you missed live stream 1, which was Tuesday, and live stream 2, which was yesterday, we talked about option basics, option types, contract size, strike price, expiration date, what an option means to be in the money, at the money, out of the money, time decay. We also discussed volatility. We did some case studies on Tuesday with QQQ. That was a bearish trade, and BAC was a bullish trade. And I also did some option selling case studies yesterday with Biogen, and I tried to do something with AMC, and of course that didn't work. I'll talk about AMC in just a moment. But everything we discussed and a lot of the stuff that we did was based around a new app that I put out there into the community for all of you to have access to. So a quick question. This is a quick question for all of you in here. And I see a lot of the same folks in here. I'm very excited. And we're going to talk about these case studies in a moment, but let me ask real quick, how many of you are now looking at this? All right. Looking at, not the Qs, sorry, looking at the app I download that allowed you to download. All right. It's called our morning report. We're going to look at the morning report again today. And I've got a blown up version of it here somewhere. Let me find it. There it is. And all we've done so far is just crack open the expensive IV section and the cheap IV section to find trading opportunities. I hope you like that. Notice that Biogen's up there at the top today. Shocking that AMC is not. It should have been, but it wasn't. All right. But look at GameStop down here as well. So On the other side, we've got HPQ, we've got Salesforce.com, we've got Costco on here. Three of them that are just popping up in my brain as stocks that I've traded options on many times before. So we're going to get to this. We're going to get to this thing momentarily. What I want to do is I want to talk about our case studies, that what we've done so far with case studies. Let me get rid of that. Here we go. So I talked about a QQQ bear and a BAC bull. And then I also talked about option selling case studies with Biogen and with AMC. We're going to look at each of those. So let's start off with what we talked about on Tuesday. We talked about, again, looking at cheap options as a reason to buy because there's just less risk. So if you look at an average world and you say an at-the-money option costs $5 to $10, and then you look at what the Qs were trading for, and hey, Qs are going to be cheaper. They don't move as much. But the fact that the Qs were down trading at that dollar, that $1.75 to $2 level, and I bought them high around $2 as an example. And I just took a small position on the put side. A lot of people thought it was crazy. They said, you're going against the entire world right here. And yesterday it kind of looked like that as the low got to 88 cents. Now, typically what I do is I will, on a lot of my option trades, and if they're $5 or $10 or the more expensive ones, I may throw in a 50% stop loss, but I don't throw 50% stop losses in on something that's $2. It's just it has too much of it with this volatility in this market. It has too much of a wiggle room. So yeah, we hit a low of 88 cents, but then by the end of the day, close to the end of the day, we cranked right back up to 2, only to close somewhere above 1. Look what happened this morning. Okay, a lot of you could say, well, that was a gift from Russia. Hey, if it wasn't Russia, could it have been a gift from someone else? Again, I don't look at those. I look at rules-based trading. And when we talked about this on Tuesday, I discussed and I showed how to, first we looked at spying that opportunity. We saw a short-term bearish opportunity that happens out of Memorial Day on the Qs. And we also saw a bullish opportunity in the Bank of America, which has nothing to do. Financials have nothing to do with technology. So it made good sense to have that kind of hedge going on there. So the Q puts this morning, they popped up to 3.5. And my target on this, and I talked about this on Tuesday, was 50%. Because again, I don't see a combination of 100 stocks doubling in value. However, it did. It went from $2 to $4.18 was the high. I've got it right here on the screen. You know what? I need to bring up something real quick so all of you can see what I'm doing. But if you take a look here, 4.18 was the actual high. So that was well above the $4. And this is such a big widely traded instrument. The bids and offers are very, very tight on the Qs. All right, so that was a nice little 2-day move. And so moving over to Bank of America. So Bank of America, this one was bought down around the $1.20 mark. And that was actually the low for Tuesday. It's not the low for Wednesday. The low for Wednesday was just below $1.10. Look at where we were. This was about 11:30. I snapshotted this. And you can see the high was $1.79 on this one. Now, if it's a stock, like I look at stocks a little differently. I look at 100% returns. All right. If it's an option or a ETF, I look at 50% upside. Just because ETFs are a group of stocks all fighting together and you're trading the basket. So that's how I look at these particular opportunities. And so far, those two are looking really good. Let's move on to what we covered yesterday. So yesterday, I jumped in and started talking about puts. And I talked about selling puts. And I know selling puts isn't something that everybody can do. I got something for you today that's going to be a lot easier on your pocketbook in terms of what you look at on a trade by trade basis. So if you look at, for instance, BIIB, which again, this one's also looking really good today. So BIIB, we looked at selling puts yesterday, and I showed an example of selling the July 16th 200 puts at 350. Well, we hit 350. We also hit 350 on the high this morning, but now we dropped down to 3. So 350 to 3 is 50 cents. And 50 cents actually ends up being somewhere, it's really somewhere around a 15% return so far today. This is one that I'm going to let this one roll out. But I'll let you know what else I was doing too. All right, that I didn't talk about is I've been selling premium on Biogen with expirations of this week, expirations of next week, thousands of dollars in premium that I'm looking to collect here in the next day and in the next week. And looking at the volatility of these, they still look really good. But I want to discuss with you another way that you can utilize high probability, but be able to do it with a lower risk and a lower reward. All right. So, wow, Phil, you couldn't have been better. It's almost as if I paid you to say, what is the name of that app? I can't find it because this is the name of that app. It's called TG Suite. And you got to put a space in, TG space Suite. Found that out yesterday. There's a lot of things I find out after the fact. So that was number one. And then number two, when you download the TG Suite, and it's available on iPhone, it's available on Android, it works on your smartphones, it works on your smart apps like a tablet, smart devices. And so when you open this for the first time, there's going to be one of two choices. At the top, you log in. If you have a subscription to our software, all right, and that even includes a free trial. You take the free trial of the software, you can just use your login and password, and that will open up this suite of apps and allows you to go in and utilize the morning report and maybe a couple of other ones, depending on what type of software package you have with us. But if you're not a software user, you still have access to the morning report. What you got to do is go to the bottom where it says non-subscriber. Click on that, fill out the information there, and then this will open. The part in the middle will open, and you may see all of these first six grayed out. All right, but you will still see the money report highlighted. If you click on the money report, you get now the morning report. Excuse me. You get these six different lists. You have the ability to view the lists. All right. If you have our software, you can look at the charts on those lists too. But the list itself, to me, is very important. So again, TG space Suite is what you're looking for. All right. Let's do a quick little stop here. And I put the stop sign here so that I could, one of the things that I was not doing enough of, and I apologize, is I wasn't looking enough at the comments that were coming up. So I'm just going to scroll through and try to see if I can find some comments on here. Jonah, you want to look at Plug Power. I can spend some time going through charts, but you know what I'm going to do? I think I'm going to go ahead and I will look at the charts on everything. Let's kind of hold that off until Monday. You know what I will do though for you, Jonah, because you're the first one that asked for this. Let's do that. Let's go in. I'm actually going to bring up under our tools. I'm going to go to charts. Now we have some very interesting charts that we can do here, and so some of them are you can do on any platform. But let's take a look at Plug PLUG. So I bring up Plug Power, and so Plug Power has been a $70 stock at the beginning of the year, came all the way down to 20, and starting to get a little bit of a rebound. This is actually good because you've got a high, you've got a low. So let's see where the resistance could be on Plug Power. To do that, I'm going to click on my stock chart Fibonacci, and I'm also going to look at something called a channel test. We do a stress test on channels. So the stress test will tell me, give me an idea where the direction is. And obviously the direction is down. It doesn't take a genius to figure that one out either. But if I get way in here in this chart, this was another comment someone said, hey, blow your charts up, please. I can't see them. All right, this is as good as it gets, guys. But as you see, these channels are all kind of coming together. We've got a long-term downtrend that we are sticking on right now with Plug Power. And we have to push through that. All right, we have to push through that. If we push through that, then we're looking at $40.35, $46.62, $52.89. That's the Fibonacci retracements. And that's where you're going to see real resistance coming in if we can get above today. I think that $40.35 level is going to be a tough one to crack there, especially with the downtrend that we're seeing when we're putting all these channels together. short, intermediate, and long term. So we have the ability to, within a click of a mouse, auto, it auto puts out these channels based on what our computer's algorithm is seeing. So you don't have to put the channels out there at all. You don't have to determine how big the channel has to be, how long the channel has to be. All you got to do is you put your stock chart in right here. You come on down, make sure all these are up so you can look at our stock chart peaks, Fibonacci. This grid just turns the grid on. And then we can look at volume bars as well. And then down here, channel stress test. That actually puts these channels all together. And this one is kind of an ugly looking channel, but there are other ones that can look really good as well. All right. So that's the first stop I'm going to. Come on down, come on down. The app would not let me in. Are you, Matthew, if you're a tools user, then check your username and password, case sensitive. If you're not, you got to go down to the bottom and register. All right, register in order to get that app. All right. What does the color coding mean for the morning report? Great question, ML. Great question. So the color coding, and I don't have my my phone on there right now, but I'm just going to look at the phone real quick because we have the morning report on desktop. And I don't know, it doesn't really give me a color code here on the desktop, but it gives us a color code. And that color code is where is the stock in relation to its high or low today. Okay. So if I'm looking at the TG Suite and I'm going in right now, looking at the morning report, and I'm going to look at expensive IV because that's what we're going to look at today. A lot of that current IV that you see on the expensive side is showing stocks that are higher than their open. And that's what we're seeing. And we're just looking at it today only. All right. So good stuff there. Great question. Thank you very much for bringing that in. Let's see what we have. Yeah, Plug has unusual put volume. And if you go and look into the unusual put, and I'm going to bring it down because I have it on the desktop here. Unusually high put volume, check that out. Plug Power is in the unusually high put. And it doesn't mean all puts, okay? Let's make sure we realize that. It means take a look at which ones are being bought and or sold. That's the June 18th, 2021, 29 puts. That's how you read that option code there. 21 is the year, 06 is the month, 18 is the day, P for put, 29, that's your strike, okay? And then I'm going to show you something else that you might have access to, guys. You may need a software. You may need the ability to have a free trial or a software to do this. I don't know, but down at the bottom you'll see the stocks appearing in multiple time frames. So, for instance, Apple is in 3 of those buttons. Bank of America is in 3 of those buttons. Ford is in 2. FCX in 2. GameStop, Planetaire, Sun Energy, and Tesla. They are appearing in multiple lists. And so, if it's unusual high and unusual high calls and unusual high puts, there's a lot of option buying going on. And that's probably on the expensive side. But if there's a lot of selling going on, then it could be unusually low. It could be unusually high calls, unusually high puts, a lot of selling going on. And then what do? Well, then you look at the cheap IV because maybe all that selling is pushing that thing down in the cheap IV. Carlton hit the lottery, got the app. All right. And John's saying use the delete key until it's clear and then re-enter your email. That's a great, and John's on here. John's one of our programmers. John, good to have you on. I know you're a busy man, but I'm glad you're here live with us today. So if you look at the text message that John just put out there, and you know what? I'm going to light this up. John, I'm lighting you up. If the app says email does not exist, you may have an extra space in your text input you cannot see. All right, that's the first thing he says. And then here's the answer. Just use the delete key, clear it out, enter it in again. Thank you very much, John. Appreciate it. It's great that I've got my I got one of my partners on here that works with Tom's Trading Room. I got the programmer on here. So it's great that I've got all this extra support in here because it is a bit tough for me to talk and type at the same time. All right. So let's continue here. So let's move into spreads. And so this is a tough subject to talk about, especially to people that are brand new. So I want to ask the question first to the 770 of you that are in here right now. How many of you in here have never traded a spread before in your life? All right. My question is, how many of you have never traded a spread, which is a combination of two options at the same time? Who in here falls under that category? Because that's going to help me determine really how fast or slow I go with explaining this. All right. Wow. Okay, there we go. Quite a few. And see, now the bad news on spreads is you got to go up a level. All right. You got to go up a level in your options trading. The good news is that if you let your broker know that you understand spreads, and I want you to understand spreads first, but after which, if you let your broker know you can understand spreads, then what you can do is your broker's going to look at you and say, well, because you're a unit of risk to your broker. So, that's why they're not letting me or anyone else just put AMC, start selling put options or call options on AMC, even though the volatility is super high. They wouldn't let me sell those. And so, I'm looking at this and I'm like, why? Well, I gave the folks at Charles Schwab a call and they know me. And they said, I have the highest level of clearance over there. But they said, listen, we can't do it. We can't just let you go out there and just, this has to be cash settled. It means that you can do it, but you have to call it in. You have to call it into their desk and they will take a look at what you have on cash reserves and they will determine what's the most you could do. I would never go the most on anything. That's just stupid. See, a lot of the all-ins yesterday on AMC as TikTok. There was a TikTok AMC target that was ridiculous. I think it was $1 million a share, some ridiculous number like that. There's been 1,000, there's been 500. Those are all ridiculous numbers too. But what's happened is people get pulled into that greed and then they just say, I'm going to bet it all on AMC. And those that bet it all on AMC and did it at the end of the day, because there was a lot of extra volume at the end of the day, and it even pushed hard that night too. Look at AMC right now, $48.20. Look at the closing. The closing bar yesterday was $63.25. And then even in the after hours, it started moving higher. And it sucked a lot of emotion, a lot of greed in. There's a lot of fear in it today. And that, going from $63 all the way down to $38, whew, that hurts. That hurts if you're all in. So I want to talk a little bit about, again, the same thing can happen with options. You take a look at the options on some of these things. I mean, they're just ridiculously priced. Let's take a look at AMC for a moment, because it's really going to help me set the table for looking at these options. So I'm going to come over here into tools, and I'm actually going to go into the option chains, and I'm going to bring up AMC. Some of you are looking at the screen right now. You're like, Tom, how are you able to look the opposite way? You got eyes in the back of your head? I wish I did, but I don't. All right, it just so happens that the monitor you're looking at over here on your screen is over there on my screen. All right, so let's go ahead and look at AMC. And what I want to do is I want to look at AMC 50% above and below. Here we go. Said I was going to do it. I'm going to look at AMC 50% above and below the stock price. All right, so I'm going to come over here. Let's look at the options that expire tomorrow and see what they're going for. All right, so let's do a little reference. Those Bank of America call options that I showed you as a case study a couple days ago, what were they trading for? $1.20, and they got July 8 or June 18th expiration on them. So they have 2 weeks to expiration. This has a day to expiration, and let's see what it trades at. So if I come over here and update, now come on down, and I'm going to go right to the middle here. Here's the stock price, $47.77. The 47 calls, $7.85 with 1 day to expiration. So when you look at this, I'm going to show you right now where option traders think this stock's going to range between now and tomorrow's close. You guys ready? How far is it going to likely move between today and tomorrow? Show you how that's done. Let's take, 47.77. The 48 calls and the 48 puts are the closest to the money. So if you want to get a read on where this stock is likely to go, I can't tell you if it's going up. I can't tell you if it's going down. All right. What I can give you an idea on as an option trader is where the likely range is going to be between right now and tomorrow at 4 p.m. Here's where I believe where I'm getting that information. See that 758 or 748? Round it up to 750. Okay. Now take that and add it to the put over here. The 763. Let's round that down to 750 also. Okay. So it looks like what the projections for AMC are likely to be as far as going up or down in the next couple days is 15 points up to 15 points down. It's going to be in a 30-point range. They're looking for a 30-point range above and below where the stock price is right now. Okay. Now, I want you to hold that thought. I want you to hold that thought for a moment. All right. And Lorena, what we're talking about here is we're not talking about options, delta, or gamma. We're actually talking about the theta of the option and the vega because they work together. When you look at the theta, that's the real time value of the option. All right. And then if you look at the vega, that's this number right here. See how high the options volatility is today? 756. What's the VIX trading at, guys? What, 15? Maybe 20 today, thanks to Russia. But nowhere near that. I mean, this stock is just pushing back and forth very hard. It is it can be one of the most exciting and at the same time stressful stocks in your life. So I'm showing you how an option trader thinks. An option trader is looking at this, they're dissecting it, and this is a really prehistoric way to do it. You just take a look at the at-the-money call and the at-the-money put, and you know by expiration where that's likely to range. We could do it with next week's options. You want to see what it looks like in a week? We'll come back up here, and I'll go to the June 11th options, and we'll look at the June 11th. I can just look 5% because I'm just looking at those at-the-money calls and puts. Look at the at-the-money calls. 1388, the at-the-money puts, 1408. So we're really looking at here about a 28-point move, range bound. All right, 28-point range between now and this time next week, next Friday. So that's how we look at this, okay? Now, I like the one-day move because the one-day move has that 30-point move. It's got that 30-point. Oh, I'm sorry. I screwed up, guys. I screwed up. You take that 1388 and 2408, and that's about 28 points. You go 28 points above and 28 points below. It's 56-point range above and below the stock price today. I like the 30-point range that we're seeing right now above and below the stock price by tomorrow. We can utilize this. We can utilize this and create a high probability spread. But I want to talk a little bit about spreads before we get into it. All right. Guys, tell me something, guys and gals. Are you liking the education that you're getting here? All right. Are you liking this education? I mean, I really do. This is some of my favorite part of doing this, online is just educating folks to not only rules-based trading, but also educating you on the alternatives other than simply just going out there and buying stock like AMC. I got to tell you something. I also am an investor too. I mean, I'm all over the place. I've got private, I've got public investments. I've got my wife and I, our family own some farms in Central America. We own real estate property around the world. That's not what you're here for. But what I am saying is that a lot of my public stuff, like Pet Meds Express, happens to be one stock that our family owns. All right. And we don't own it because it's on a short list. We don't own it because it's a red stock. We own it because it's fundamentally sound. And wow is all I can say as to what happened to that stock price yesterday. And wow is what I saw what happened to that stock price today. It was probably my biggest gaining stock yesterday, and it was my biggest losing stock today. Right. Same thing with gold, GLD. All right. I saw somebody push gold on here. I love gold as an investment. I do. And the reason I love gold as an investment is not a lot of people gold was out of favor while Bitcoin was at 50,000, 55, 60, 63. And I started to add into my GLD position as an investment, not as a trade, As a trade, I look at some different ideas on GLD, but as an investment, I like it long term. And I'm letting you know, full disclosure, I own it long term. All right, so let's talk about trading spreads. Guys, if you do find everything we're doing here informative and you want to see more stuff like this, do me a favor, hit that like button, smash it. All right, smash it for me right now. It's very easy. Just go down there and hit that thumbs up. All right, and if you're brand new to us and you want to get what we're doing on a regular basis, subscribe to the channel, ding the bell, and we do live streams once a week at least. We do podcasts once a week. I'm not doing a podcast this week because I've been on YouTube too much. And then also I do videos once a week too, where we'll go in and we'll talk about a specific strategy, etc. Next week, I'm coming back with the videos and I'm going to discuss the morning report. And I'm going to talk about all the other buttons that we just didn't have time to discuss today, this week. So trading spreads. First of all, spreads. They involve trading more than one option. So I'm buying something, but I'm also selling something to help pay for what I'm buying, right? It's kind of a finance trade. And by putting it on as a simultaneous trade, you lower your cost, you lower your risk, and you also lower your fluctuation so you're not as stressed out as things move back and forth, right? That's the thing I find really well. So that's what we see again, and where we see these things, kind of moving around to. And Jim, you know what? I'm going off the math that I've looked at with just some recent past numbers. But if you really want to know where it is real time, then you're right. You got to look at what your broker's platform is allowing you to buy or sell those calls it puts for. So I'm with you. All right. So back to spreads. So I'm going to break down 4 different spreads for you right now. All right. So these are the 4 spreads I'm going to break down. Each one of these are designed as so for instance, if you look at the top one, bear put debit spread, right? That is a vertical spread where you're buying a higher strike put and you're selling a low strike put, and you're doing that on a combination spread trade. So what we're looking for is these spreads. If they're debits, I'm looking for them to widen because I want to sell it for more money than I bought it for, okay? Same thing with the one down here. All right. This is a bull call debit spread. That means we're buying the lower strike call and selling the higher strike call. And we're also looking to do that for a debit that we're looking to increase over time. Now, on the right-hand side, I've got a bear call spread, which is a credit spread. That means that when we buy the higher call and sell the lower call, and I want to do that above the stock price. That's why I got the word stock price right here. Right? This is typically, not always, but this is typically how I trade these spreads, right? Now, with the credit spread, I want the credit to drop. I'm selling the spread. I'm taking money in. I want to pay out less than I took in. Same thing with the bull put credit spread. We're going to buy the lower put, sell the higher put. That's going to be a small credit, and I want that credit to get even smaller and perhaps expire worthless so I don't have to buy it back. Okay? So that's what I'm looking at when I'm putting these spreads on. All right, that's what I look at, as we move along and as we look at these spreads. And so what we can do is, I want to go back and I want to look at possibly looking at our trades that we had on and see if we can take an AMC and turn it into a spread, and see if we can take BIIB and turn it into a spread. All right. So now let me back up a sec. See this, the blue box? Somebody's got to be asking, what's the blue box mean? The blue box means I'm going to go into this particular spread in detail and explain how a spread actually works. Now it's going to be relatively the same for the other 3. So just keep that in mind. All right, so let's move forward. A call spread, a call debit spread. Now I'm using XYZ. XYZ is not a tradable instrument. But if we were to buy a lower strike call and sell a higher strike call, that is a bull call debit spread. Buying the XYZ 100, selling the XYZ 120, right? Now, the XYZ 100, that lower strike, for calls, it's always going to be more expensive. But what we're doing is we're using the 120 to help pay for the 100. And so If I'm shelling out $10 for the 100, I'm bringing in 5 for the 120, then I have a combined debit of $5 for that spread. Multiply the $5 times 100 because that's what the contracts are for, and you have a $500 risk. This is also, expressed as a if you talk to someone who does this all the time, they say, "Hey, I bought the XYZ 100 120 call spread, paid 5 for it." That's what that down at the bottom actually means. All right. So if we're going to look at risk graphs, and I'm a big proponent of risk graphs. I love risk graphs. It helps me understand ahead of time what I stand to lose and what I stand to make on any given spread or any given trade at all. So if I take my XYZ 100 120 call spread and I paid $5 for it, how much can I make? How much can I lose? And what's my break even? Those are the things I need to know. What if I'm right? What if I'm wrong? What's my break even? So let's start with what if I'm wrong, because that's really the first thing that we need to talk about. Okay. What if I'm wrong means that what I paid on the spread, that's the most I can lose. That 5 points or $500. If XYZ is trading at 50, that spread goes out. It becomes worthless. If the spread goes above 120, what happens? My 100 call is worth a lot more money. My 120 calls may be worth a little more money too, but when you add them together, the most I can make is take 20 points. 120 minus 100 is 20. That's the most you could make on a spread, is the difference between strikes, minus what you paid for it. So if I take 20 or $2,000 per contract spread, take out the 500 I risked, and that's what's left over is the maximum reward I can make. My break even at expiration is always going to be the buy strike on a call, that lower strike. You want to add what you paid for the spread to the lower strike. So if it's a 100 call and I paid 5 points for it, 100 plus 5 is 105. It's really that simple. All right. So we look at that, and that helps us determine our maximum risk, maximum reward, and break even all at expiration. Now, again, let's talk about 3 different traders. Okay. And one could be a stock trader. One could be a call trader. One could be a spread trader. Stock trader, if they buy 100 shares of stock for $100 a share, that's a $10,000 risk. But if they're going to target a reward, let's say it goes from 100 to 120, this is what happens. The stock trader is up $2,000. That's about a 20% return. Trader B buys a 100 call only, pays $10 for it. So that's a $1,000 risk. At 120, your $10 call is worth 20. So that means your $1,000 has grown to 2, which means you have a $1,000 reward. That's a 100% return. Now take a look at Trader C. Even though there's a fixed return, a fixed risk and a fixed return, in this particular case, Trader C actually did better on a return on investment. The 100 120 call spread for 5, well, that's a risk of $500. At 120 or higher, the most that call trader can make is $1,500. But at 120, it represents a 300% reward to risk ratio. In fact, it doesn't matter how high it goes. The thing is what does the call trader need to do to get the 300%? Well, they need that stock to get to 130. What does the stock trader need in order for their trade to get to a 300% return? They need the stock to go to 300. So you can see return on investment requires much less of a move in the stock on spreads than it does on calls, and it does on the stock itself. That's why I like spreads. All right, now let's look at the other reason I like spreads, because there's another reason too. What if the stock goes against you? And I already gave you an idea. If the stock goes to 50, what happens? All of these traders lose money. The stock trader is going to be down 50%. All right. The option trader, both the call trader and the call spread trader, are going to lose everything. They're going to lose their 100%. But look at them in dollar amounts when you look at a 1-to-1-to-1 ratio. All right. Stock traders down $5,000. Call traders down, if they buy one call instead of 100 shares of stock, they're down 1,000. Trader C put $500 into a spread, which is like, it's just like giving you the right to buy at 100 and obligating you to sell at 120. So that's a 1-to-1-to-1 trade as well, has a $500 loss. They all lost money. There's kind of a silver lining here when it comes to this particular type of trade. Let's look at some case studies. Now, this is Amgen. It's funny because today a lot of stocks in the pharmaceutical area. Biogen's expensive, but I noticed Amgen and I noticed Pfizer, and there were one or two others that were all hitting something called our darknet signals. And I put the past darknet signals on here. Now I'll mention this very quickly. All right, darknet is a contrarian trading strategy. I like to say it's similar to Elliott wave, but the problem I have with Elliott wave is that the wave counts always keep changing. Our darknet counts do not change, win, lose, or draw. So darknet is also a buy-only strategy. So I don't get sell signals on here. I get exits. I get exits when they make their moves. But I can get up to 3 different buy signals in the same direction. So it can also be a scaling strategy as well. What we do is we look at darknet channels. You know, those long, short, intermediate term channels as they kind of flow together. Our computer has a way of picking those with some tolerance and gives us buy strategies, rebuy strategies, and add-on strategies. Now look at the first 2 arrows that you see here on the screen, right? The green arrows. This was a darknet buy on Amgen back when it was at about 237. And then another, this is the second buy that came in around 232. Look where the sell came, right up here. Sell came up at around $250. So that was a nice trade. As an option trader, that's a lovely trade. But the other thing I want you to keep in mind is, and this goes for the majority, the average of our darknet signals, is that they end up lasting on average about 30 days. Well, look what happened today. We didn't get one after earnings. Drop, rebound. Dropped, but now it's starting to create some channels in here. And darknet has a support channel. It says this is a buying opportunity. So spot the opportunity. All right. This is one of the strategies that we use. Yes, it is available on our software. If you have not checked out our software, you can get a free 2-week trial. Just look at the description below. And there's a couple of different levels. If you're interested in darknet, you got to go with the contrarian trader. We have Money Counter, which I mentioned on Monday. That's our complete trader. And of course, our option trader is our level 1 service for options traders. So back again. So step 1, spot the opportunity, the rules-based opportunity. We've gone back and we've done back testing for years on this strategy. And it comes in around the 70 percentile of win to loss ratio. All right. So moving forward, the second step is to create the acceptable risk trade. All right. So back up a second. Let me back up. I could buy the stock here at 235. It's going to cost me $23,500 to buy 100 shares of stock. What else could I do? Well, I could come in here and I could buy these at the money calls. They're going to cost $5.15. Okay, much less than $23,500. But still, it's going to cost me, if I mid-price this, $515. See, this is the bid at 505. This is the ask, 525. This is right down the middle. 20-cent spread between the two, not bad at all. Now, this area that's in red, and I've highlighted these two. The green is the option to buy as a bull call spread trader, and the red is an example to sell. You can sell at 255. You can sell at 245 if you want to. I just brought this one up to share with today's live stream. So if you take a look here, the 250 call is trading right down the middle at 220. So I'd pay 515 and I'd take in 220. That's a little less than $300. I've paid myself back 40% of my cost of my 240 calls. That's what spreading does. So what's my risk? My risk is not $515 anymore. If I got this off at 515 and 220, my risk now falls down below $300. What's my reward? My reward is, let's just take $3 because that's an easy one to work with. We know it's $295, but let's just say we get it for $3. So the difference between strikes, 240 minus 250, there's a 10-point difference between the strikes. If I paid $3 for this spread and the most it can expand to is 10, how much could I stand to make? 7. So I have a $3 risk and I have a potential $7 reward. That's more than that's a double would be 3 goes to 6. But if 3 goes to 10, that's better than a triple. right? What's my break even? My break even is you take that 3 points, the difference between the strikes, and you add that to 240. So 243, actually 242.95 is going to be the exact break even on this trade, because I'm going to take the difference between strikes and I'm going to add it to the option that I bought. So 242.95, and there you go. And now it's just a matter of, if you want to see this on a risk graph, this is what it looks like. So the 250 call at 220, the 240 call buying for 515. Again, that's $295 of risk. You see it right here on the risk. Doesn't matter how low Amgen could go. We see that risk down at the bottom. But if Amgen comes back up, and it just comes back up to not even the highs. In fact, 1, 2, 3, 4, 5, 6. It goes up to the highs that were 6 days ago, and that was after the drop a little bit. Back up here to 250. We're at the maximum profit potential by expiration. By the way, these are the July 16ths. Now, why did I choose July 16th if this is a 30-day trading strategy? Shouldn't I have chose something around July 4th, since today's the 3rd of June? Yes, I looked at the July 2nd options. The spreads were too wide between the bid and the offer. Remember what I said? I said this on day one, that typically when I do 30-day plus or minus a little bit strategies, I'm always looking at that third Friday strike. The third Friday strike in almost every case is going to have more volume, which means more efficiency, which means a tighter bid-ask spread. That's very important to me as a trader, the tighter bid-ask spread. Now, credit spreads are just like debit spreads, but they are a reverse. Again, I'm selling an option and I'm bringing in a bigger premium than what I'm paying for protection, right? Think about credit spreads like insurance companies. When you go out and you do a homeowner's policy on your house, what do? They look at the size of your house. They look at the square footage. They look at what neighborhood you're in. They look at what flood zone you're in. And they take all these variables and they create a premium that you have to pay, right? You have to pay that premium. Now, when do they have to pay? Well, they have to pay if a hurricane comes through or something happens to your house. Then they have to come in. You're going to claim insurance, and hopefully they're going to pay you. Where do they get this money? Because if the XYZ insurance company is all over, certain counties in Florida, and a hurricane comes through and wipes out all those houses, these guys are going to be in trouble because they didn't take in anywhere near the premium of what they're going to have to pay out. So do you know what they do? Allstate, State Farm, some of these, this medium size, large size, they'll call them large size insurance companies. What do? They package all of their insurance, all of their liabilities together, and they reinsure that at a lower price with like a Lloyd's of London. So what they've done, your insurance company does credit spreads all day long. They're taking premium in from you and you and you and you and everyone else, and they're bulking it all together, and they're buying a policy for the bulk. And what they're buying for is much less than what they sold all the policies individually on. That's how they keep from going out of business. So take a page from the insurance companies, because that's exactly what we're doing. We're going to sell some premium, but we're going to buy some protection. We're going to reinsure. That's what a credit spread does. All right. You're buying and selling different strike prices, but you're using the same expiration date. And the result's a net credit. And if you're doing a credit spread, you have a fixed amount that's coming in. You have a fixed amount that's at risk. Always, always ask yourself this question, right? I tell this to everybody. What if I'm wrong? That's the problem that a lot of folks are not asking, that are hanging out with the AMCers, the GMEers, and the Dojis of the world. All right. By the way, I was going to do a trade on Doge. I was waiting until I did the cryptocurrency piece. I was going to do a trade on Doge, and my plan, and I don't trade Doge, but I was going to do a trade on Doge, and I was going to show you exactly when I was going to get out. And when I was going to get out was when the official announcement of Doge was going to hit about Coinbase representing. Well, unfortunately, the day to have done that would have been on Tuesday, because if I had done it on Tuesday, I'd have been out on Wednesday and I'd have taken that 20% move and then walked away. All right. Buy the rumor, sell the news. That's a strategy as well. All right. But back to credit spreads. Credit spreads allow us to still have those high probabilities, but not be on the hook for unlimited or huge, huge risk. Let me show you how this works. So we're going to revisit AMC right now. And I want to go back to AMC. Let's go take a look at what's going on in the market. Look at Biogen. Gotta love it. Gotta love it, because this one I'm ringing the cash register on. Showed it yesterday as a put strategy, but we're gonna look at it again, guys. We're gonna look at it again. I want to look at Biogen. I want to look at AMC. So AMC is down 24% right now. It was down a whole lot more. Do you know when you go up 100% one day, you go down 50% the next day, you're right back to where you were before you went up 100%? All right. Take a stock, go from 100 to 200. That's a 100% increase. Take a stock, go from 200 to 100. That's a 50% decrease, right? We need a lot more upside to replace what happens on the downside. And that alone should give you a lesson on risk. So here we go. And you know what? Biogen's not up that much. It's up barely 1% today. AMC was down a lot more. But we're going to take a look at both of these, and we're going to come up with some credit spread trades. And how about some credit spread trades that expire tomorrow? Tomorrow. That's what we're going to do. So we looked at Amgen, and I showed you an example of a bull call spread. Now, I want to look at examples of bull put spreads with both of these. And again, I have not looked at these today other than what I have in my own account. But with Biogen, I have not looked at these today. So I don't know what we're going to come up with. We might not come up with anything. Right. So it's important to realize that too. Right. So we might not come up with anything. But what I want to do is I want to look at both. Want to see what's going on with them. Want to see what we can really place a trade with on these as well, if they do meet all the requirements we're looking for. And the requirements we're looking for is expensive options. So AMC was on the expensive option list yesterday. It's not today, but I bet it will be at the close today with what I'm seeing in real time. Biogen's at the top of the list. Let's start with Biogen. So Biogen, $271, but look at the low. The low was $266. I want to be below the low of what's been happening in the last couple days. So here's the low, $264, that happened on Wednesday. All right, let's see if we can put something together that gives us some good reward to risk ratios on this trade. Because I did have, let me look and see what I have going on with, okay. So let's go and look at here. There we go. Again, start with Biogen. We'll get to AMC in a moment. I'm actually going to leave that one up. Here's Biogen. Let's update the time, because I've been looking at this one since this morning. All right, 20% up, 20% down. Let's use that. June 4th. Not going to see me do too many trades out here. And by the way, these are case studies. These are not recommendations. I'm just showing you how it is that I approach these markets and create these trades, both long and short term. This is going to be an interesting one. Friday, 1 day to expiration, a day and a half, if you want to call it that. So let's take a look and see what's going on with Biogen. Let's update this trade. Let's look at what's going on at the money. Now, again, if I want to be bullish, what am I doing? I'm doing the bull put spread. Let's go back and look at the piece that I want to cover with you. The bull put spread. This is what I want to do right here. All right, let's get rid of this. Goodbye. There we go. Let's bring this back up. Now, where my mouse is. Buy the lower put, sell the higher put. All right, so let's look and see what's going on with those with Biogen. So with 1 day to expiration, the lower puts are up here. Remember, the strike prices, I got calls on the left, I got puts on the right. Let's blow up the puts, and let's look and see what we got going on. The 270 put right now is trading at $5.25. Let's just see if I sell that at the money put, and if I buy the 265s. Now, I'm going to tell you something. This is going to be, you're going to make less than you're going to risk, but you got to realize we're dealing with probability here. The stock could go up or the stock could go sideways, and you can max out by the end of tomorrow. That's the premise with this particular trade. But if I go in and let's run the risk graph and let's look and see what we stand to make and lose on the trade. So here's the trade right here. And this is an example, again, if I bought the 265s and sold the 270s, look, I'm bringing in more. I'm bringing in $525. I'm paying $345. So I'm going to bring in $180. My risk is going to be $320. All right. That's the laws of probability. You're always going to, you're going to risk more than you can stand to make, but it's a probability trade. The probabilities are what? Well, if we look down here, I actually have probabilities on here as well. Look at that. Look at that. Oh my goodness. You guys understand what this is? This is option volatility right here. All right. If you take a look, 7 to 30 is in red. Then I've got the 30 to 60 in blue, to 60 and 90 in green, and everything over 90 days to expiration is in black. Look how high the red line is spiking because the options volatility on Biogen is so high right now. That's why I like those short-term options. Come on down. We've got an area you can take notes. Look at this. Statistical probability on this trade is that we have an 83% statistical probability of profit on this trade by tomorrow. Now, I want you to focus in on something. That still means that we have a 15.2% chance. Is it 15.2? 16.2. 16.2% chance that we're going to lose money on this trade, right? But that's how I look at this. All right, the weather outside says that I've got an 83% chance it's going to be sunny, and I'm going to have a less than 17% chances that we're going to get a rain shower. Well, in Florida, hey, those rain showers can happen at any moment. But I'd go golfing that day, all right? But if it's 50-50, I won't go golfing. So that's how I look at probability. Now, let's take a look at this trade once again. This trade is, what are we doing? It's a 1-to-1 trade. That means for every option we're buying, we're selling one. The only difference is the strike prices. The expiration dates are the same. The strike prices are different. And what you're bringing in is higher than what you're paying out. And the idea on this trade is to let it go to zero. Okay. This is okay because zero is going to happen tomorrow. If it happens, zero happens tomorrow. What we're looking at is a 56% max risk to max profit on this trade. Okay. That's what I see. 56% profit to risk. That's Biogen. So Biogen actually looks like a viable trade. And the best part is, if Biogen goes to zero, what's the worst you can lose? It's right here. It's called max risk, $320. If you get the trade, if you're able to take the trade at $180 credit. Now, for those of you who've never done this before, I would suggest you watch this trade. All right, because we can look at stuff on the expensive list and we can do these type of spreads. We can do these type of spreads in place of selling naked puts, in place of selling naked calls. Those are, again, examples. Now, let's do a little sentiment example here with everybody real quick. All right, the symbol was BIIB, if that's what you were asking for. So, little sentiment, guys. Blow the screen up for a moment. AMC. Who's bullish? Who's bearish by tomorrow? What's the sentiment call look like in the room? I got 750 people in this room right now. So I can have potentially 750 different results. All right. Who's bullish? Who's bearish? That's going to be a lot of comments. And so I'm going to look through them as they're happening. And again, a lot of bears on the screen. And I'm talking about not over the next year. I'm talking about by tomorrow afternoon. All right, you got one bull, two bulls. Everybody else is bear. Bear, bear, bear. There's a bull, bull. Sheepish. Bear, bearish, bull. All right, here's what I'm going to do. We're getting a lot of mix here. So here's what I'm going to do. We're going to look at one of each. All right, we'll look at a bull and we'll look at a bear. All right, so let's look at so the way that I do this is we take that expensive option, and what we'll do is we're going to look at, in this case, I'm going to go back to my option tables again. Let's see what AMC is doing real time. Well, it's coming back. Never, ever believe that these guys from Reddit are not going down without a fight. All right. Look at that. down to 38. We're already back to 50. That's a 20-point move, guys. We've been talking about the same amount of time that this thing's been moving. Now, granted, 11:30, 11:25, 11:15 was the low, but still, I'm just showing you, this is the area right here where a lot of people more than likely bailed out of the stock. And, we could go in and we could bring up, some settings. Let me bring some settings up on this one. And let's look at the equities and let's just add the volume on here because I'm curious to see there. Okay, so you had a big spike. You had a big buy spike at 10 a.m., but you had a big turnaround that happened at 11:15. And 11:15 was followed by almost a candle reversal, a 3-period reversal. And that could take that up as well. So for those of you that are in the bullish camp, all right, here's what I believe is an interesting trade. I don't know if it can be done, but let's take a look at it anyway. So let's go over to AMC. Let's bring this up. Let's say 30%. I mean, this thing's, well, really, let's make it 50%. Who are we kidding? This thing's going to move like crazy anyway. Update, 50%. Let's look at the June 4th. Ones that expire tomorrow. All right. So I'm going to do, what if you're bullish? What if you're bearish? What did I do after speaking to Charles Schwab? We'll do that in just a moment. All right. Here we go. 4808. That just shows you where this was. Okay, so you know what? I've got to actually update this. I might have to, because this one moves so fast. Yeah, because this one's moving so fast, guys. I'm actually going to go right to the brokerage platform. All right. Let's just do it from the brokerage platform. Street Smart Central. Somebody was asking yesterday, and let me say it real quick. I'm not your broker. All right. And I'm not your investment advisor. I'm not your broker. But someone was asking about where to find Street Smart Central in Charles Schwab. So what you do is you go to schwab.com. And once you log in, go to trade. And then you'll see a big list of stuff come up and over it. And that's a different platform than I'm on right now. I'm on streetsmartcentral.com. But if you go, you can find it by way of schwab.com. Just go to schwab.com, log in, go to trade, go to tools. And over to the right, you'll see all the other platforms, even real-time platforms that they have. All right. AMC. So I want to show you something. Remember this yesterday? My session's been terminated. Well, that's not fair. All right. Let me grab this. I'm going to move it over. See what I'm doing, guys? I'm moving it over so that I don't show any pertinent information. All right, let me log in. That happens sometimes too. Although I haven't seen it happen like that in quite some time. But here we go. And my account's made a nice turnaround too today. But it didn't look so good this morning because of all the longer term investments that I saw. It did so well yesterday. It came back today. All right, let's put you right in. Let's put right here. Let's take this, slide it over here. Let's slide this over, and there we go. AMC. I'm trying to blow this up as much as I can because I know it's hard to see these things. I'm not buying the stock. But remember yesterday I tried to sell the puts? And if you try to sell the puts even today, at least with Schwab, I can't do it. So here's what I do. I look at perhaps a put spread. Now, the put spread immediately is telling me, oh, the 56, 57. We already know this thing's going to be, potentially $16 to let's call it $18 below today's price or above today's price. That puts us around the mid 30s. Okay. So what if I were to buy? What if I bought, let's say I bought the 25 put. That's 17 cents. What if I sold the 30 put? That's a 5-point put spread. Now, that is disgusting. Okay? That is absolutely disgusting. What if I were to, as Tony says, go wide? Let's go wide. To go wide means maybe I want to sell the 35s. 64 by 65. So let's call it 64. All right, 64. means that I'm going to take in a maximum of 64 cents by tomorrow afternoon, as long as we stay above 35. But if we go below 25, I'm going to risk $10 minus 64 cents or 61 cents or 60 cents. What's going on right now? All right. Yesterday, I tried to sell the puts. You guys all know that. I got closed off. The gates closed on me. Called Schwab and Company. They said couldn't do it. I can do it over the phone with you right now. I said, I'm not even near my computer. I'm not going to place a trade on the phone with you without seeing what's going on. I said, can I do a put credit spread? Yeah, you can do those online. I said, great. So got back to my computer. This was trading at $1 yesterday. I'm in this at $1. So, I'm looking at it now at 66 cents and I'm like, ugh. If it got back to $1, which is where it was actually above $1 earlier, like about an hour or two ago, this looks really good. Now, unfortunately, what you got to do is you got to look at, all right, well, since it's gone up really nice here, maybe I got to use 40 now as my potential area for tomorrow. Let's take a look because they're buying this thing back like crazy anyway. So what if I looked at 40? What if I bought the 40, sold the 40 puts and I bought the 30 puts? That could be done for $1.35. If you can do it for $1.35, what are you risking? You're risking $3.65. Okay. $3.65. So there you go. So of the two credit spread trades I've shown you, I really like the Biogen trade because it has a better reward to risk ratio. But this one is a lot more percentage point out of the money. Now, how you put this trade on, right? So what I would do is if I like it at, let's call it $1.35, I just hit $1.35 and I have that as a credit. So sell to open, buy to open. I'm selling to open a higher strike, buying to open a lower strike. That's my protection if we go below 30. And so my bad, guys. Somebody just, I can't believe I didn't see someone come in and tell me I was wrong. But that $1.35 risk, it's not 365. $1.35 return is not 365 risk. It's an 865 risk. So still, you got to realize your reward to risk ratio on some of these with 1 day to expiration. It's going to be, that 10-point spread minus the credit you receive. But it's about probability. It's a trade-off. You want higher prob? You got to have higher risk. That's the way it works. Al, you're absolutely correct. Higher probability comes with higher risk. And that's the message that I want to convey to all of you today. You might say, well, I'll just sell the 40 put. You sell the 40 put, and let's say you're taking $1.68. What's your risk then? It's 40 points down to zero minus $1.68. Now, what's the chances that AMC is going to go to zero tomorrow? Very, very slim chance. Very slim chance. But you're opening up greater risk this way. That's what you're doing. Okay. All right. So, as I kind of finish up on the day here, we talked about different types of spreads. We talked about, how to place these spread orders. I showed you a couple of examples based on real-time data that we see. At this point, I want to do two things. I want to stop and I want to just look real quick at what we have going on in the universe of comments and see what we have happening here. And I apologize if I don't get to your comment, guys. There are so many comments out here. Reverse risk and reward depending on debit or credit spread. I'm more of I take debit spreads when I believe something is going to go in my direction. I take credit spreads when I believe something is not going to come back and bite me, is going to hang out over here. So it's kind of like I'm over here and the hurricane, which is risk, is on over here. And I'm not looking for it to come and squash me. But when it comes to credit or to debit spreads, I'm looking at directional debit spreads where my reward is actually greater than my risk. All right. See a lot of one words in here, but I see bulls and bears, a lot of bullish and bearish comments going on in the marketplace. So guys, okay, here we go. What's the difference between a central and edge? What's the difference between central and edge? Will, not sure I understand what you're talking about. But let me just mention this. What's the first thing that I do when I'm looking at debit spreads or credit spreads? When I'm looking at buying calls or selling puts? What's the first thing that I do? Well, it's where I'm going to leave us off at today. And that is look at your options. Look at the options that are cheap or expensive. To me, if all you're doing is trading options because they're cheaper than the stock, and every option is going to be cheaper than the stock, then you're doing yourself a very grave disservice, because you're really trading options on price only, and price only going to hurt you. Price only is going to hurt. I want to show you an example. Let's go back over to AMC. Let's pop AMC in here. AMC, and there's AMC, and this is the last 2 days of AMC. Now, let's look at AMC, but a little differently. .AMC, the 21, 06, 04. Let's look at the 50 calls. 5 O's. 50. Oh, I need to put the C in for call. 50. C50. Bang. There it is. Now, I want you to look at both of these charts. Both of these charts span over 2 days. All right. So AMC went from the high 30s to the low 70s, back down to the high 30s, and is trading right around 54 right now. The call option went from $2 to $28. That was a fantastic gamma move right there, and delta move. And then it hung out, but look what it did today. It dropped back down to around $3 and is now trading at 10. So if you bought yesterday at around just where we are today, if you bought at that $50 range, $50 range on the way up, really it kind of took off at 12.15. At 12.15, you're paying anywhere from 15 to 20 points on that up move. Now look where we are today. We're still back. We're back to 55. So the stock trader's okay, but the option trader's gone from that 15 or 20 point trade. Their option is now worth 50 to 75% of its value, because you know why? Because they went in and just bought call options because they were cheaper than the stock. And that's not the way you make money on options consistently. I look myself at buying cheap options, selling expensive options, and finding a reason to do so. All right. Harmon, thank you so much there, buddy, for the donation. And I mean, you know what? Thank you so much for the comment too about our option tools. Tom'sOptionTools.com. Awesome. I appreciate the plug there. And guys, for those of you that are brand new with us, you've never tried out our tools before, we're offering a 2-week free trial to Tom'sOptionTools.com. It's in the description below. And so let me just end it with this. I'm taking tomorrow off. I've got to be somewhere. I know I told you guys I was going to do live streams all week long. I cannot get out of this. It's just something I can't get out of. All right. And so anyway, I will be back on Monday, and we will pick this up again on Monday. And what we'll do is we'll do a full look at stocks, bonds, currencies, commodities. We'll see what's going on with those. But I want to dive into Bitcoin. I want to dive into Ethereum. I want to dive into, yes, Dogecoin. Maybe I'll look at a few others. But that's where I want to go with all of you before we end on Monday. Till then, I want you to do yourselves a favor. If you're brand new and you want to check out a free app that we put out there for everybody to act on, it's under our suite of apps. It's called TG Suite. You got to put a space in between TG and Suite. Once you get that, down at the bottom, if you're not an option subscriber or not a Tom's Option Tools subscriber, then just go down to where it says no non-subscriber. All right, fill that out. You get access to the morning report. The morning report is number 7. all right, of our buttons that are on the TG Suite app. And that opens up 6 different types of option scans, which we've been using these scans every single day here for the past 3 days. All right. So that is pretty much it for me, guys. I want to thank you all once again for being part of the community. Again, if you found this information helpful, please do me a favor before you slip on out the door. Hit that like button. It really does help out the channel, guys. It really does. And have yourselves a great upcoming weekend. I will be back on Monday with another live stream, and I will also be doing a video. I'm going to be doing some videos this week. I'm going to chunk them out into how to use really short videos on how to use that morning report. All right. Thank you, everybody. We'll see you next week. Bye now.